Joining us now is Dan Clifton, head of policy research at Strategas Research Partners, a Baird company. Dan, it's great to talk to you here. I mean, it's interesting because for as much as there's been kind of the pressure and the friction and the back and forth and the debates about, what the Fed would do and what the administration might prefer, the data have come in such a way that you now have this consensus built by one way or another about roughly the path of cuts. So what do you think the main implications are of this interesting dynamic we're going to have of the composition of the Fed governors and regional presidents as we see it?
That's right. Well, first, good afternoon. Thank you for having me on. I think it's important. Directionally, Powell and Trump now think rates got to go lower. Rates are going to go lower, and we're going to have a debate about how many of those rate cuts. As we get deeper into the fourth quarter, we're going to have a debate about what the balance sheet should be doing because bank reserves are getting low and whether QT should end and what the Fed should do with its mortgage-backed security roll-off. Should they put that money in housing or T-bills? So that's a second story that's building. And then you have the compensation of the Fed, exactly what you're asking about. And we're watching these court cases very closely. Lisa Cook has won in both of the lower courts. There's been a pattern in immigration and trade where Trump loses in the lower court and then wins at the larger court. So I wouldn't call that case over. But if Cook is removed or allows Trump to remove her from the Supreme Court, from the Federal Reserve, it would really start to open up the wheels for financial deregulation. And I think the market has kind of looked at this Lisa Cook as Trump just trying to get lower rates, get 300 bips down lower on the Fed funds rate, when in fact it will start creating the votes to do very significant financial deregulation. And something we noticed, Mike, is that the bank stocks have been very sensitive to these personnel changes. I mean, the banks started to outperform the S&P 500 when Kugler's seat unexpectedly came up in early August and then really accelerated on this Cook news. So I do think that it will be very important for thinking about financial deregulation on a timing basis. If Cook stays on the Fed, then eventually some point in 2026, Trump will be able to do it, but it would allow him to do it sooner. And then second is that if Cook leaves, then you actually have the votes to start not reappointing regional Fed presidents in February when they come up. And that's very significant. You have 5 regional Fed presidents voting on the FOMC next year, and that's where you could see some changes. So you have all these interesting subplots building on the Fed in addition to your traditional monetary policy stories. And I think they're very important and they're underappreciated by investors at this point.
What particular financial deregulation measures are one vote on the Board of Governors away from getting through that matter?
Yeah, so if you look at the Bowman speeches, and Governor Bowman will be putting forward a plan that she hasn't put it forward yet, but she's outlined it. And it's deeper than just the supplemental leverage ratio, which would allow banks to buy treasuries without impacting their capital requirements. But she's talking about changing the global systematically important bank surcharges. How do you unlock the hundreds of billions of dollars that's sitting on the JP Morgan balance sheet, put that into more productive uses? Very consistent with what Treasury Secretary Bessent's trying to do in using financial deregulation to be able to get rates lower and really kind of ease financial conditions to get growth, economic growth higher in the U.S. And that means that you're changing the Dodd-Frank regulations that were developed after the global financial crisis. And I do think that there are some FOMC members, such as Michael Barr, who have been opposed to making those changes. And so as Trump gets more and more members on the board, that becomes a much more plausible scenario to do in a more aggressive financial deregulation, one that could really impact what those capital requirements are going to be for the banks.